Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 29, NASDAQ off 57, S&P's off 11, gold contract up $35.30, trading at $1,210 an ounce. And that's from, we're going to go over gold, but it's been a trip the last few days, no doubt about it. Silver up 93 cents at $16.49 an ounce. Platinum up 35 at $1,237 an ounce. Copper up 6 pennies, trading out at $2.91 a pound. Light sweet crude up $3 at $69.15 a barrel. Bonds, we have the 10-year down 5 ticks at 127.16. 30-year off 19 at 143.15. King dollar down 428.6 at 87.98. You got the euro up 23 at 124 and the yen down 32 at 118.32. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. We're going to cash S&P at 2053. And what you have here, you got into the lower range. That is saying that more than likely what we're going to see, you're going to see it come down slightly lower. What I do expect is some kind of a small bounce out of here. This just being the beginning of window dressing. Well, it's the beginning and end of window dressing specifically. You know, today, tomorrow, if you take a look at the SPY pulled back on 80 million shares. That had gone topside on the 21st with 142 million. Now, the 142 million was light volume. But what you have is that we just came into that area. We're at 206 right now, and basically it looks to me like she wants to do one more test. I don't expect new highs up here that will hold. The bottom line is that this downdraft has started. Dow Industrials. We're going to take a look at the Dow Industrials. What you have with the Dow. Dow gets down to 17,726 today. Rejects lower price. It's going to have lighter volume. The Dow also wants to test the highs more than likely Friday once again. The highs of Friday we got to 893 and the high was 894. NASDAQ Composite. Now the composite is, well, the small caps have led it, started off on the way down. The composite is confirming it today. Composite down 58 bucks today, which is about 1.5%, I believe. Yeah, 1.2%. You have volume on the way down. Composite right now is at 4733. Somehow this is also going to get some kind of a little bounce going. We take a look at the 3 Qs, the NDX 100. Inside the NDX 100, we're down with 29 million shares. You're going into 34 million. So that also implies that the NDX can get a small bounce going. Now, gold market, okay? You want to see something that has some nice volatility in it, and you want to see something that when you're taking a look at it without liquidity, what in fact can happen. So, gold out here this morning, folks, okay? Well, not necessarily this morning. What we did have is this. Our markets, half a day on Friday. You had the Swiss vote on Friday. And the Swiss vote, by the way, folks, was baked into the market, meaning that it didn't have a chance. That what the vote was about is that the citizens were voting, would the Swiss National Bank have to hold 20% of their reserves in gold versus 8%? It never had a shot. That's the bottom line. That being said and done, what you had is this, is that you had the gold market get down to a price point at 6:30 last night of 11.40. Bottom line, gold's at 12.11. That just screamed out of there with conviction. And it was a classic test, by the way. When I say classic test, when you want to see how this tested it, if you remember something, if you get the gold report, you know that what you're always looking for at lows is what? Fast price destruction without volume. And that was the ultimate. When you talk about fast price destruction without volume, there was zero volume, but yet they got it down there. Bottom line, what do we have now? You have it just took out the swing points of the last 2 weeks with volume. We've done 323,000 contracts in the gold market. You're at 12.10. This little baby is 12.56 next, and then you're going to see it up to 13.41 area. If we go over to the silver market, we take a look at silver. what we have with silver is this. So, silver, you talk about a move on silver. Silver is so volatile, it's unbelievable. Silver is up 6.1% after being down about 5%. No, yeah, that's the swing on silver today. It's $14.15 to $16.81. Amazing swing in price. Silver also, monster volume on silver, 111,000 contracts. Bottom line, silver, I suspect first we'll get to $17.82 and then start crawling all the way up to the $21 area. What we also had, and this is what was pretty cool, folks, okay, and this is what you like to see, this is what I like to see specifically, is the aspect of what gets reported versus what doesn't get reported. And what had got reported over the holidays was the Swiss deal inside, and that's why they say gold was getting crushed. What wasn't reported is that India had changed their regulation. India had put in a regulation last year, and India, folks, just so you can understand how this works, India imports 25% of all the gold that's mined every year. That's their average, okay? They're the largest users of gold, period. What had happened in 2013 is that their deficit was going up so dramatically that they changed a few regulations, and those regulations basically took the demand side of gold down by over 25%. Bottom line, on November 28th, they changed the rules back. And that in itself is huge. That's the first part. Second part is even more intense, and what it is that November to May is the wedding season, and that is the biggest season for buying gold. So that correlation there, when I saw that that wasn't really into the market, bottom line is that that was a neat situation, and I expect what you're seeing out there is that buying in gold out there today, it's just a supply and demand curve. But bottom line is that I suspect that we get a nice bottom once again in gold. Now this one here caught a lot of people on the wrong side of gold, which is just perfect for a bottom. Platinum goes topside. The low in platinum today was 1182. You're at 1239 right now. Bonds. Let's go to the bond market. So what do we have with bonds? 10-year bond gets to a higher price out here, gives it up, can't hold price. What you're going to have out here, though, is that you right now we're at 127.16. This can pull back to about 127. You've gone into the bar of the October 15th. And we're into a deep, by the way. That is saying we're going to go to the top of that bar, which is 130.18 in the 10-year. And if we take a look at the 30-year, 30-year got up to a price point today of 144.23. That high is 148. In both cases, we're going to see that get up to those levels. King dollar. What did King dollar do? King dollar tested its highs once again, gave it up, couldn't handle the highs, and come off those highs, with volume. So this little baby here is going to be pretty cool watching it shake out, because what we've had thus far is this. You had King dollar at 80. King dollar right now is at 87.99. It hit 88.50. The high of last week was 88.45. The actual high was 88.51. You're coming off that, and you're coming off that with volume. That is telling me that what we're going to see is that you're going to see King dollar come off the high once again with conviction. That would be wide price spread, accelerated volume. Our phone number is 877-927-6648. Now, let's get back to the S&P for a second, because what I do expect here is this. This is the first day in window dressing, folks, okay? Market's deviant enough. NASDAQ gets hit pretty good. S&P, not really. I expect what you're going to see out here, you're going to see a small little bounce, probably tomorrow. It's going to be on lighter volume. It'll come up under, if we take a look at the SPY, it can get up about, we're 206.91, 207, and then that's all she wrote. Why? Let's go over to the, when we come back, we'll go over to the XLE, we'll go to the XLF, we'll go in a couple of these sectors. Oh, we didn't do oil. Oil did a perfect ABC structure on the way down. We'll run that through as soon as we come back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrial's down 24. NASDAQ's off 57. S&Ps are off 10. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 10. NASDAQ is down 52. S&Ps are off 8.5. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom.
How you doing, man?
Hey, not too bad, thanks.
Good.
Got rid of the snow finally.
Oh, you get so you guys got snow and then it got nicer out and get rid of the snow, yes?
We had back-to-back storms, so it was. Yeah, I'm definitely putting some calls into Florida.
There's no doubt, man. I'm telling you. You know, it's amazing too. Is that I can tell you, folks, from across the country, we have short-term units also, and it's amazing because the people are going to be scrambling. If you're coming to Florida, you better call, because our short-term units are already sold out, and that goes all the way out till the end of March, which is pretty amazing. And this is
not looking short-term.
This is early. No, I know. Yeah, I'm with you. So we're gonna look at SanDisk, right?
Yeah, looking at shorting that. What do you think?
Let's take a look. You get SanDisk, folks. Okay, the low for the year is 64. The high is 108. You're trading at 102.85 right now. And what he's looking at is that this had gapped off its high, and when we bring this back, it was 108.77 in July. Gaps down with monster volume with 29 million. Goes back up and tests the 29 million with 4. Gives it up from 104. Goes down to 80, and now has just tested it again. Let me pull this back on a weekly for a second. Yeah, I think you're good. You know, on a weekly, it's screaming that October 15th week's going to get tested. The high of that is 86.97. You know, so yeah, I mean, I like that trade, and you know, the bottom line is that it's not that far off its high. You know, we're talking only 6 points at this particular point, but yeah,
where should I put my stop?
Right on the other side of 104.99. I put a 105. You know, 105 and change.
105. And can I ask you one more?
Yeah, sure.
I'm looking at that AMV, that gold. I tried to get in this morning, but it kind of took off on me.
Okay, let's take a look. You got Allied Nevada, the low's 85 cents, the high is 670. This is, okay, so we're off. If you're going to, what I would do, you're at 174. So Allied Nevada, folks, okay, from low to high, the low's 85 cents. The high is 670. That's for the year. You've had a couple different signs of strength last few weeks. And if you want to see, this was like a classic, meaning that, you know, on Friday you back down with 3.1 million versus going topside with 7 million and 9 million. You go topside again today with 4.6. I'd buy the first pullback. You know, I mean, this thing wants to run to 204 right now, but you can't buy it now because you're up 28 cents, and the reality is that you got to put your stop under 141. You know, so anywhere close to 140 or 150, I'd be buying it.
Fantastic. Thank you, Tom.
Okay, man. Have a great one. Have a safe one. Some of the high-volume stocks today in this marketplace, and some of these high flyers are getting whacked a little. We have Apple. Oh, let's talk about Apple. So Apple, what you had with this morning with Apple, folks, is this. You had a large seller, and this shows there's no large buyers on the bid. Apple now is only down $3.75, which is nothing. That's 3%, right? That's nothing. What you do have, however, is 73 million shares in intraday, okay? Someone wanted out of the stock, and they wanted it out of it bad, and they took any and all bids that were there, and they bid it all the way down to 111.27. And what that was, when they want out, period. And what you had as they were getting out, they pushed out 181,000 shares, and they didn't stop there. I mean, there's some big numbers out here: 88,000, 85,000, 83,000. There's a monster getting out of Apple. So what you're going to see out here, you know, you're off the high with 73 million. Bottom line, Apple's going to be making its way down to 103. We'll see what ends up happening at that particular price point, but they're clearing the decks here. So the oil, let's go to the oil market. So oil, CLF. Oil cracked, and cracked with volume. Okay, it was an ABC structure on the way down. You conservatively, we were looking at a $70 A to B equals C to D. Now, what you have is that, okay, was this or is this a larger ABC structure on the way down? The way I'm looking at this, folks, is that you got your first ABC structure on the way down. It was a $70 price point. We got down to 65 on Friday. This morning, get down to 63. It rejected that level. So what you're going to end up seeing now, so watch what you're going to have. You're actually going to have a high volume, low in oil. You'll get a counter trend bounce. Oil can bounce like in a heartbeat, 74, 75. And if this bounce happens on lighter volume, all oil is doing is setting up a larger ABC structure on the way down. If we go over to the XLE, we take a look at the XLE. XLE has come into your October 15th swing low. That October 15th swing low, the low is $77. The high of that bar is 80. We got the 78.67 today, and we did that with 44 million versus 69 million. So the bullish and bearish scenario on the XLE goes like this. You're down at the swing low from October 15th. You're down there on the daily basis with light volume. More than likely, what you're going to see is on a weekly basis, more than likely it may also have lighter volume. If that's what we have, you'll see the XLE bounce, and I suspect the bounce would get into a price point. The bounce can go all the way back up to 85. We're at 80. Can go up to 85.15. If you get that on light volume, market's not, the oil and gas service sector is not done going down. If we go take a look at some of the equities that are in that oil and gas sector, right now ExxonMobil is up $2 today. Chevron is up $3. Those are the largest movers and the largest weighting structures in the XLE. So what you have here is that Chevron is up 340. Good juice behind the move. What we will have, let me just see this for a second. On a weekly basis, we have 57 million. You're going to have 10. Now, even on a weekly basis, these are going to bounce right now. ExxonMobil, we take a look at ExxonMobil. What you have with ExxonMobil, that's up $2.15. You're at 92. That can bounce right up to the top of that gap. But what we will, so the bounce is on inside that service sector, and that is also, folks, what's going to put is putting a little more juice inside the S&P. Now, the small caps have been leading on the way down, continue to lead on the way down. I expect we're going to get a small bounce out of this too. But what you have with the small caps are on their way down to this October 15th swing low, which is 103. Bounces, let's see, we're at 115.40 right now in the IWM. You get to 117.53, you want to be selling that baby. This is Tom O'Brien. This is TFNN. 877-927-6648. Dow right now is down 20. Nasdaq's off 55. S&Ps are off 10. Gold is up $35. You get silver up 93 cents, and platinum is up $36. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. traders. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 21. You get the NASDAQ off 56. S&Ps are off 9.5. And don't forget, folks, at TFNN, every trading day we do 10 hours of live broadcasting, 8 in the morning to 6 in the evening. Then we replay that. You can get all of that right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com, hit the TV in the top right-hand corner. You'll get the audio, plus you get the video. Now, each and every trading day, our man, Mr. John Logan, he kicks us off 8 to 9 Eastern Standard Time, does an outstanding program every day. John has a profile scanner. Now, this scanner, folks, okay, is an amazing piece of software. It bisects and dissects the market and sectors. In fact, it dissects every market in the world. That scanner right now, you can get it on Bloomberg, bottom line. He has made that available to the TFNN listeners. You can test drive that. It's a $97 a month value, absolutely free right now. Come over to our website at TFNN. You're going to see it right on the front of the carousel. Now, when you're looking at the scanner, if you listen to the program in the morning, you know, John gives you a huge amount of information away for $0 on a continual basis like everyone else does at TFNN. And he uses the scanner. What the difference is that when you have the scanner yourself, and he is going to walk you through this webinar. He's going to walk you through how the scanner should be used. So take advantage of this value, folks. It's an amazing value. The scanner itself, you can have it right now. You go over there and sign up. The webinar is going to take place on December 9th. What you're going to have there, it's a free webinar. It's going to be on your webpage. Bottom line, great value. There's videos that are on the site right now. When you hit that you'll be able to see how the scanner actually works. They're great videos, but check it out. It's just an amazing tool. And what we do have is that as we have these different sectors that either break down or break up, the scanner picks it up very quickly. So, market-wise, let's go over now and take a look at the market in general. So, the XLE, well, first off, start with the XLE. So, the XLE, what that baby had done, the XLE, the highs in the XLE are 100, and right now we're at 80. So, the XLE already had come down 20%. It's banging into this high-volume swing low from the October 15th level, and you're getting into that level with lighter volume. We're talking 45 million versus 69 on a daily basis. What does that mean? That means you're going to get a bounce. The bounce itself will tell you and tell us what the probability is of it going lower, meaning into the $77, or in fact staying in a consolidation. We take a look at the XLF. We go to the financials. What you have inside the financials is that they are coming off their highs slightly with an expansion of volume. The XLF, until that comes back inside $23.88, that is not saying much. I expect that's going to happen. Why? Because all of these indices, folks, have high volume spikes October 15th. They're going to get tested. The metals market in general, okay, bottom line, huge test. My take on that is that we've not only bottomed, but you have a nice long-term bottom, because this is how they work inside the metals market, meaning that you go down, you go further down, you go back up, and then you get that fast price destruction without volume. We had that, and we had that when markets were closed. And it was for the equity side of it. For the equity, there is no doubt. For the equity side of the whatever you folks, myself included, that own gold stocks or silver stocks, it was sweet that the market was closed out here when, in fact, they were cracking the gold market. Because it wasn't pretty at the beginning of last night. But what I did see when this was happening, there was absolutely zero volume. That in itself was really cool. There's no two ways about it. But, it didn't mean that it had to perform like it did. Bottom line is that it did. Some of the Dow stocks out here, this is what we have happening, some of the Dow stocks. You have Honeywell down $1.62. Marvell is off 40 cents. You get Caterpillar off 177. Big Blue is down 70 cents. Big Blue continues to have big problems. Let's go to Walmart for a second. We take a look at Walmart. Yeah, Walmart's just a normal pullback. That's down $1.29. What we have had is that the numbers that were coming across from the retailers were a bit light over this Thanksgiving huge shopping weekend. What I do expect, you're going to see the hype before it was absolutely amazing, meaning that they figured that those numbers would be extraordinary. And by the way, just so if you haven't got your head wrapped around this yet, it's not only that they were down. They're down, folks, on an aspect that last year the numbers were low. If you remember last year, every retailer in the world was blaming the weather, and that's why it was so bad. So these numbers were down. They were down on the aspect that, there were small numbers that they were going against. Amazon, today Amazon's down $12. You're trading at $326. Amazon also has that high volume low. Amazon, the high volume low on Amazon is $284. That's on a shorter term basis. We take this and we do it on a longer term. Bottom line, Amazon is building cars to get into dramatically lower price. So what's going to get intriguing here is that what is the next shoe that's going to basically pop off? The difference is Alibaba. Check it out. So BABA, and this is something that I'm sure that many of us may want to get into. When this thing basically finishes correcting. But what you have with Alibaba out here today, down $5. That's not a lot, but it's like 4%. You've hit a price point of 103.89. Right now you're at 106.51, but 106.51 is breaking the swing low. You're doing it with the lighter volume. It's with 46 million versus 36 million. It looks to me like Alibaba is going to make its way back to this $99 level. We'll see how it handles at that particular point. Baidu.com, well, here, let's look inside the NDX 100. So inside the NDX 100, that's taken away from it today, is Tesla. Tesla is down $13.75. You get Facebook off $2.83. Amazon's next at $12, and Baidu.com is down $8.73. Putting juice into it, even though the NDX 100 is down, is that you have Microsoft up 86 cents, Fox, the 20th Century Fox, Fox is up 41 cents, Symantec is up 27, and Verisk is up 61 cents. Bottom line is that this NDX 100 itself, right now we're off that high, $1.26, 30 million shares, but the three Qs are going to need more than 31 million shares in order to stay down to lower price. You have Sandridge, okay, so Transocean is down $1. You have Yahoo off 151. Yahoo's going to be trading now with Alibaba. Twitter is off 216. And if we go over and we take a look at Facebook for a second, you're going to see with Facebook, this is the second leg down on Facebook. Facebook gapped lower when they come out with the numbers on the 28th. Facebook was at $81, gapped down to 76 with 100 million shares. On Friday, you tested that with 15 million. Now you're down with 29 million. Facebook is going to be going after the lower swing point out there at $70, and we'll see how it attacks that $70 level. Google. Let's go take a look at Google. We have a Google. Some of these, Google right now is down 887, and she is coming into a lower swing point with volume. Google's going to also go right after this 508. Last high in Google up here is 598. So you absolutely have some of these high flyers that it's subtle. They're coming off those highs, and they're coming off those highs with some big juice out here. So what I do expect is that you're going to see the market itself, no doubt, folks, has held up all year. It looks to me that they're not going to be able to hold this thing up coming into December, which is, very unusual. There's no doubt about that. But what we do have is that you have that dollar that is topped out. You have the XLE first that basically got taken to the cleaners. Oil got taken to the cleaners. And the scramble inside the oil market is pretty intense. And we'll see where that whole thing's going to shake out. But what I do expect you're going to see is that we're not going to be dealing with $100 oil. Oil, thus far, looks like it did an ABC structure down, finished out what it should have done. We'll see what type of bounce we get out of the oil market and go from there. The bond market is still screaming that U.S., if you want to see something, U.S., I think we're USH5. Bond market out here is still screaming it wants higher price. You actually, so we got to 143.09 today, 372,000 contracts. You get to a higher high, have volume behind the move. That means you're going to be right back up there. See, the bond market has and is screaming that this market continues to want lower price. This is Tom O'Brien. This is TFNN. Don't forget, folks, over at our website at TFNN, right on the front page, you're going to see the TAS Market Scanner and Mr. John Logan. You can test drive that all month. $97 value, absolutely free, and get his webinar also free. Coming right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 41. Nasdaq's off 65. S&Ps are off 13. And what we do have is that percentage-wise, that's 0.2% on the Dow, 0.5 on the S&P. Nasdaq is 1.35. Nasdaq has some juice on the downside. What also had some heavy juice out here on the downside was Brazil. Brazil out here today, folks. You're talking about taking a beat, and they were down 4.5%. So that was a big number in Brazil. And Brazil right now is at 52,000. And the way this is setting up, this October 27th is going to get tested. That's the 48,000 number. Holiday shopping out here. So what you also have is this. So check this out. Internet holiday shopping rose 9% so far today, Cyber Monday, slowing from the same time frame last year as consumers spread their online purchases over more days. While sales today, so typically the busiest day for web shopping is today, folks, okay? Why? Because as everyone's coming back from the Thanksgiving holiday weekend, they sit at their desk and order. The increase as of noon today was not as fast as last year. Last year, the jump was 21%. This morning, as of noon, it was 9%. The slowdown took place even as Amazon, eBay, and other online retailers cut prices on electronics to lure shoppers. Amazon is touting its Fire TV for $69 as part of Cyber Monday. What it really seems like is that I've been trying to shop for a couple days, but I've just been busy. My take on this right now is that the internet sales are going to be bigger. I suspect that when the whole holiday season has ended, we probably have spent more money than we did last year. But I'm not worrying about deals going away. That's what it really comes down to. And I suspect a lot of other people aren't worried about deals going away also. Because the aspect of the internet in general, and if I gauge how I shop on the internet this year versus last year, it's more than 500%. It's probably like 4,000% more, because I just shop on the internet now. So what tends to happen, if there's more people that are doing the exact same thing, guess what? The internet sales is going to go up versus the store sales, but it's going to be spread over a longer period of time. Because what you do get when you're shopping on the internet, of course, you get a good gauge of what the prices are and what they should be and what the competition is. You know, that's kind of how it shakes out. You know, so I suspect that they're going to get the numbers that they want, but they expected something that's much larger than I guess is going to be out there. 877-927-6648. Let's go take a look at that XAU and the HUI. This is going to be a nice sign of strength in both of those ETF structures. The XAU right now is up $4.73. That is going to be going after the B point, I suspect, tomorrow. Many ABC structures on the way up. If you take that B point out with volume, we're going to have a beauty, because the A point on this is 61. Your B is at 74. So you're talking $13, which would get you up until the 81 area. Right now we're at 73. And once you get into 81, 82, that's saying that the XAU is going to go to 104. You go to 81, 80. If you go to 81 or 82 with conviction, you get 84 in it. 84 gives you all the way back to the highs of 6 months ago. The Gold Bugs Index, we take a look at the Gold Bugs Index. What you have with the Gold Bugs Index, we're at 175.14. That's up $12. Also set up an ABC structure on the way up. The A point on this is 146. Your B is 81, 181. So what's that? $35. And that would get you up to 200. And anything over 202, 200, 202, that basically sets up a 250, which is just a monster number. And what it will also do is get you back inside the larger range, and then we'll have to call our man Rick from British Columbia, because what you very well could have here is a very large head and shoulders bottom. And you don't want to speculate in head and shoulders bottoms, because head and shoulders at lows are all over the place and at highs are all over the place. What you can do, however, is look at it and say, okay, we'll see how we break what would be the neckline. And if, in fact, that's what happens, then what you're going to want to do is that, you know, if a head and shoulders, in this case bottom, you'd break the neckline, then you would launch higher, then pull back to that neckline again. If, in fact, that's what we're in, now that's the bullish side. The bearish side of that, or the frustrating side of that, let's put it that way, would be if, in fact, that's what we're in, we would build a consolidation for a very long period of time to lay up that right-hand shoulder, because the left-hand shoulder, if in fact that's what it was built, let me put this on a monthly actually. The left-hand side of that would have been built for a good year. So we'll see where that does shake out. What we have in place right now is that we have in place that you've tested the 2008 lows, you've rejected the lows, you've done it with lighter volume, all of the above, and so we know what the volume characteristic is now because we're in December 1st. The volume characteristic on the test of the HUI was 464 million versus 528 million. So you tested it, rejected it, had lighter volume. We go take a look at the XAU. We put this on the 10-year also. On the 10-year, the XAU had 670 million versus 693. Now, this is cool. So check this out. So the XAU, you see how the XAU was much lighter. The volume was it was much closer to having heavy volume. It was only 20 million lighter. Still lighter, but 20 million. What that's about, folks, and this is what we don't know yet, and we'll see whether, in fact, that happens, is that on the XAU, the stocks in the XAU can sell forward product. And the HUI, they can sell forward product, but you can't sell product forward that is more than 1.5 years of production. That's what the difference is. And, you know, we'll see how this whole thing shakes out in the next few months. What does happen, if some of these gold companies did sell forward at these lows, that's going to be a real problem for them. We go take a look at Barrick Gold, ABX. ABX looks like it's off the bottom too. Right now it's up 55 cents, 26 million shares traded. Newmont, and the reason I'm bringing up Newmont and ABX is that those would be the larger companies that would have sold off those lows. They sold quite a bit of gold the last time when they sold it right at the wrong time, and then they bought it back at the wrong time too. Dow Industrials right now down 37, Nasdaq's off 62, S&Ps are off 12.5. You stay right there, folks. Next hour we're going to have some numbers for you. Of course, we're going to have our Tigers, Amy Smith from IBD, and our man Chad Coco from TD Ameritrade Thinkorswim. We're going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great Thanksgiving, safe one. Let's make it a great month, folks. December 1st. It's a beautiful thing. This is a quote by Walt Anderson. Believe in something big. Your life is worth a noble motive. No doubt, man. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 51, Nasdaq off 64, S&P's down 14, gold contract up $36, trading at $1,212 an ounce. And that's after gold opened this morning, folks, at 11.40. You gotta love it. Runs from 11.40 to 12.12 with conviction. Takes out the swing point, does it with volume. Gold's on its way to 12.55. Silver, even more intense. Silver's up 93 cents. Silver had a price swing today, folks, from $14.10 to $16.49. Same deal. Top side in spades. Platinum up 38 bucks, $1,240 an ounce. Higher. Copper up 7 pennies, $2.93 a pound. Oil up $3.21 at $69.36. That's after oil finished an ABC structure on the way down. You get a bounce going, and we'll see what type of bounce this is going to be. Correlation out here today is what you're going to have. You're going to have a high volume low, so that baby's going to get tested. I do expect oil probably can get up to about $74 right now. If it gets into that level and you have lighter volume, what's going to happen, that's another structure on the way down. First off, it wants to go test it. The real key is going to be, does oil actually want to go to 55 bucks on another ABC structure on the way down? Bonds, we had the 10-year down 4 ticks at 127.17. That's after getting into higher price and with volume, by the way. So what you have inside the bond market, bonds are going to basically go topside once again. They want to get into the highs that were generated out there in October 15th. US H5 we're into. So we take a look at the 30-year. What you have with the 30-year, 30-year gets to a price point of 143.09 today. It does 381,000 contracts. The high of the October 15th level, folks, is 146.16. That's where we're going. Bonds have been screaming that they want to get up there, test that area, and bonds up at that area, folks, are going to send the S&P lower. King dollar. What did King dollar do? King dollar tested the highs, rejected the highs, come off the highs with volume. King dollar right now is at 88.02, and what I expect, first it's going to go after the 87.23. What I do expect you're going to see as we get into that lower price point is you're going to see an expansion with volume on the way down. That'll be a higher probability and a confirmation that the dollar has topped out right now. Gold, we go over to the gold market, we take a look at gold. Extraordinary move in the metals in general. GCG5, it's hard to believe that we're in the 2015 contract now. What gold did out here today, first off, what it did, folks, is this. It did not break the swing low of the 7th of November. When we had fast price destruction, we had zero volume. The fast price destruction came in the gold market the 28th. Bottom line, no one's in the house, forget it. What you had out here this morning, it got to 1141, rejected the price, goes topside, takes out all the swing points back to November 18th, closes over the swing. We were at 1212, closed over the 1208.20, does it with volume. Next stop on gold's 1256. I expect you're going to get the same kind of move, and what that's going to do, that's going to generate gold up to this 1347. XAU, HUI also did the same thing, rejected lower price, had lighter volume, went topside with conviction. Let's go to Charles in Drake at Mass. Hey, Charles, what's going on?
Hi, Tom. How are you?
I'm doing great. Hey, man, how you been?
Hey, I've done a little shoveling. We're okay. It's melting. The temperatures were 60 degrees today, Tommy.
60 degrees, man. That's pretty good.
60 degrees, right.
Hey, I haven't talked to you in a long...
Thank you.
I haven't talked to you in a long time, man.
I know it.
How you been?
Oh, I've been wonderful. Thank you. I've been very busy. We had a wonderful family Thanksgiving. How about you and your family?
We had a great time, too, also, man. Thanks for asking.
You. Hey, listen, thank you ever so much for taking my call.
Oh, you kidding?
And I want to thank you, Tom. Tom, going back when you had your radio program in the Natick area.
Yeah.
You made one of the great... many great calls. I think the dollar was $1.20, and you said it was going to go to 70 to 71, and I think it made it. 2008, right?
It's pretty sick, I know, man.
That was terrific.
You know what's so funny, man? I mean, I haven't talked to you in like years, right? And I know that voice.
You were in Burlington, Mass. That was about...
I moved 14 years ago.
That was about several years ago, right? On the radio.
Okay, cool, man.
Yeah.
That is awesome, man. Well, thanks for calling, man.
I appreciate your wonderful service, Tom.
Yeah.
And I want to. Can you give me your take on the technical? Your technical take on PCL?
Let's take a look. So this is
Plum Creek.
Yeah, PCL is Plum Creek Timber, folks. Okay, and let's take a look at this. So they grow, harvest, market timber and logs. It's a Canadian company. They're from Seattle, actually. The low is $38. The high is $46. You're trading at $41 right now. It pays a 4.2% dividend. This is a beauty too. Let me bring this back. You know, and this is a clean lumber company, folks. It's come down from $52. Okay, now let me just get this on a monthly and see where we tested and what we're doing here. Okay, so the high, that's where I tested right there. Okay, so 2008, we get down to $22. You have volume 167 million. The high of that low is 30. The next month we do 36. It's come down to 38. Look at that. You know, it's funny. I like this company, but you're gonna have to wait a little bit longer, man. Because what we have, Charles, is this. So this is kind of unusual. It's not unusual, folks, but a lot of these commodity companies have tested at least the highs of the lows. In this particular case, we haven't done that yet. So the risk is way too high that this is probably just a counter-trend bounce. You're at 41.60. Yeah, it can go up to 42.94. But the high of that low of 2008 has not been tested. I'd let it get tested. So that's another $10 down. It's $30. You know,
really?
It's not going to just hang out there.
What would you say the a decent entry point might be at?
It's $30.
Oh wow!
I know. It's like
I noticed the last couple of days, Tom, the price of lumber has gone down.
Yeah, well, it's
a couple of dollars.
It's kind of wild. This had a nice sign of strength last week, okay, but it's on a longer-term basis, meaning even the next few months, it's way too dangerous that this hasn't tested that low. You know, so
at $30.
Yeah, sad but true.
Do you have time for one more?
Sure.
KMI, Kinder Morgan.
KMI. Okay, let's take a look at this. You got Kinder Morgan. This is a pipeline transportation energy storage company. The low is 30, the high is 42. Pay the 4.3% dividend. Put this. So this has been a consolidation for a long time. I mean, anytime it's near $39, you can buy it. That's how this is set up. This wants to go higher. This is a stock that wants to get up to $42, $43. It was pushing last month, and it was pushing last month with volume. So let me just see this. Transports natural gas, gasoline. Bottom line is that, you know, this pipeline looks like it's still going to make money no matter what the price of energy is. That's the way it's kind of set up, man.
All right. Tom, I want to thank you ever so much. I don't know if I'll be seeing you, talking to you before Christmas, but I want to wish you and your family and everybody, whoever you know on this program and whoever calls, I want to wish them Merry Christmas, Tom. I appreciate
Thanks so much,
wonderful
man.
service.
Okay, you have a great one, a safe one.
Thank you, sir.
Okay, man. Bye-bye. You know what's so cool, folks? I'm telling you, what I really dig. I haven't heard from him for years. And when you're on the radio, what ends up happening is that I can actually go places, which I really, and be somewhere, and I can hear someone's voice. I say, man, I know that listener. And, you know, at certain times I get to meet you, and I'm really psyched when I meet you, because then I can put the face with the voice, okay? And that is just a great feeling. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back. Dow Industrial's down 51. NASDAQ off 64. S&P's off 15.5. We're going to be coming up with our Tigress, Amy Smith from Investor Business Daily. You stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 51, NASDAQ off 64, S&P's off 15. And as we do each and every Monday at 20 past the first hour, we get our Tigress Amy Smith from Investor Business Daily. And, folks, don't forget, you can come over to our website right now at TFNN. You can test drive either the newspaper for 2 weeks or the digital site for 2 weeks. The way you do it, go to TFNN. You'll see the investors.com banner. Hit that banner. You can take your choice. 2 weeks Investor Business Daily delivered to your door, or 2 weeks on your computer each and every trading day, each and every day, period, at investors.com. Amy Smith, what's going on?
Hey, Mr. Tom. Well, I've recovered from the turkey hangover, and now they're getting back into the exercise, trying to undo the damage.
I know. That's a good thing, though. There's nothing like a great turkey, and it's always the after. You know, I like cooking, so I cooked a nice turkey, 23-pound turkey.
Nice.
And you know, it's a killer because between cooking and cleaning is you know that takes some time, no doubt. But when you eat it for 3 days afterwards, that makes it happen.
It is, and you know what? We went over to his friend's house, and they had an organic turkey from Whole Foods, and I have to say it was so juicy. It was really, really tasty. Really, we didn't eat that unhealthfully. It's just that you eat a lot more than you normally do.
Yeah, exactly.
Yeah,
it's good. It's good news. So, you know, what are we looking at, the IBD's current take on the market, Amy?
Well, you know, it's funny, as I wrote in my notes, you know, I had said, gee, it would be just about right if we would get a pullback. And today, you know, certainly we got a pullback. We Of course, we had gold and silver surging. Do you have your bull hat on? Your gold bull?
Oh, I do.
Okay, you got your bull hat on. Okay, we had the best day for oil in 2 years. But, oil had come down to almost like bear market territory.
Oh, yeah.
Today, the big deal was the disappointing factory data out of Europe and China, of course. And we had holiday shopping coming in 11% lower than a year ago.
Yeah, why didn't you go out there and help them out?
Obviously, it's because I didn't use my credit card enough. You know what I think that is, Tom? There's Black Friday, there's Cyber Monday, but the specials lasted the whole weekend. I feel like I could wait until the day before Christmas, and the specials are still going to be there.
You know what? I was talking about this the first hour, Amy, and I agree, because I think when you shop online, on a continual basis, the deals are always there. So it's like, hold it. I'm going to spend the money, and I'll probably spend more money than last year. But you know what? It's going to be spread out,
Exactly.
Yeah.
I didn't feel any pressure at all that I had to do it on Friday. I just feel like you're right. If you go on, you can get little specials here and coupons, and it's not just on one day. But I did think that what rattled the market today was this weaker factory data from China, of course, Europe, and that definitely. But we also had gone up. We were up at least 17% off the bottom.
Oh, sure. Right.
It was time for us to get a little correction in here. I tell you what, though, the leaders, Tom, as I went through a lot of my screens, there was a lot of leadership that took some hits. Ambarella, they provide the chips for GoPro, took a hit today.
Okay.
We had Alibaba taking a big hit today.
Yeah.
And we had a lot of these leading stocks just did not have a very fun day today. So now, having said that, we got some of the retailers that were acting pretty good. Home Depot, Nordstrom's hit new highs last Friday, Buffalo Wild Wings, Domino's Pizza, of course, O'Reilly Auto Parts, a craft store, Michael's, Smart & Final. So there still is some strength out there, but some of these high-flyer growth stocks really took a hit today.
And that's a good heads up for all the listeners, because what is unusual, in December, folks, is that to come off highs, with some juice. There's no doubt about it. And they did.
They did.
They absolutely did.
And the only thing that I can put into this, Tom, probably is that we had our Santa Claus rally maybe a little bit early. Typically, December's a good month for the market. It's possible that some of these, the big fund managers said, we have some weakness out of China today and Europe. Let me lock in the profits that I had on Alibaba. Let me lock in some of the profits that I had, because they've got to do their books need to look good by the end of the year.
Sure.
So I think that some of today was actually profit-taking. Now, we had a newer IPO. The airlines have been doing well while the oil prices have come down. Have you looked at Virgin America?
No, what's that symbol?
Okay, that ticker symbol is VA.
Okay.
That one's looking sweet.
Yep.
You can see that one on your screen now. That one's looking pretty good.
Yes.
And Michael's, M-I-K, that's a craft store. I don't know if you have them. We have them out here.
I know Michael's well. Michael's well.
You've been to Michael's.
I do.
All right. Well, I have the Yeehaw trade for you here. How about Boot? It's Boot Barn. The ticker symbol's B-O-O-T.
Okay.
Now, they sell they sell a lot of boots. Okay, they got work boots. They have cowboy boots. Their website is bootbarn.com.
Okay.
And this one, they have 158 stores in 24 states, and it's not only just cowboy boots. They have work-related, like apparel, shirts, work shirts, and accessories and stuff like that. And this IPO, it did pull back today, but this one's looking pretty strong. Their earnings were up 200% in the most recent quarter, so that one's kind of interesting.
Look at that. They're selling boots. Folks, check this out. They're selling boots, and they took in $345 million. Oh, my God. That's pretty amazing that you can sell boots and take in that kind of money.
That's a lot of cowboy boots.
It's a lot of boots. Holy cow.
And, the thing was, I went through there. I think they make a lot of money, obviously, on these work shirts and the other type of apparel. But if you go to their website, it's bigger than I thought. I've never been in a boot barn.
No, I haven't either. Hey, where's the next city that you're going to?
Let me see. You know what? I'm off now until I'm back in
middle of January or something.
I'm in Vegas, January the 10th, I think, again.
Okay.
And then I'm all over the place. I'm in New York City and Miami.
Okay,
and
we'll have to update the listeners when you do that.
Okay,
cool.
Sure.
So Starbucks, SBUX.
Yeah, this one. Oh, I have one more.
Okay.
Did we talk about habit last time?
We did, but let's talk about it right now.
Well, it was 13. I just want to say that some of these that we have that we talk about on your show, just for the listeners to,
Yes.
They're not recommendations, but we need to keep your eye on these. This one popped 13% today.
Yeah, that's nice.
And I found out they have a lettuce wrap burger. We're going on an IBD field trip tomorrow, some of us from the editorial, and
nice.
they have one that's 300 calories, so I can handle that one.
Yeah, I love those lettuce. We have what is it? Jimmy John's. They have those lettuce wraps. Do you have Jimmy John's out there?
I don't think so. I've never heard of this, but yeah, a lettuce wrap, so I can cut out the carbs and skip the fries.
Yeah, no, I know that's tough too. I know what you're saying. Believe me.
That one's tough. Yes, you were asking about Starbucks. I mean, the only thing I can see here for folks listening in. None of these that I'm about to say really make me feel full of excitement, but I have to say what is kind of setting up looking okay, because a lot of things are not. So holding up so far, we got Starbucks. This has been in a long consolidation.
This is a 10-bagger since 2007.
Crazy.
$7 to $80, folks.
Crazy.
You know what's, Amy, you know what's amazing about this? I happen to know this because I'm at Starbucks all the time, and a lot of the folks that work at Starbucks, at the Lowe's, okay, so check this out, folks, at the Lowe's and Starbucks, this is how smart Starbucks was themselves. All of the employees that had options, right, they tried to make a deal with them to bring in some of the options and give them options at a different price. And when I was talking to him, I says, I'm telling you, don't do it. Because what had happened is that Starbucks itself in March of 2011 was taking out a swing point with volume, right?
Right.
And it's amazing. I'm trying to figure out, how did the company know that? Because that's when Starbucks was at 30, and they were trying to cash everyone out. Isn't that interesting?
Well, and even as many coffee places as we have, you've got Pete's, you've got tons of them. There's always a line in Starbucks.
There is. Listen, have a great week, a safe week. Look forward to speaking to right back here next week, Amy.
Thank you so much. You take care, Tom.
Come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 51, NASDAQ off 64, S&Ps were off 16. And as we do each and every Monday at 35 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Think or Swim. Chad does an outstanding option program every Tuesday, folks, right here at TFNN, 12 to 1 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone. We start live programming 8 o'clock in the morning to 6 in the afternoon. We replay that right on your cell phone. TFNN.mobi gets the full audio. If you'd like Tiger TV, where you get the charts and the audio, just go to TFNN.com on your cell phone. Hit the Tiger TV right in the top right-hand corner. You get the audio as well as the video. If you haven't test drove the TD Ameritrade Think or Swim platform, folks, come on over and do it. It's free. Go to TFNN. You'll see the banner on the top and the side. You hit that banner, bring it up. They'll let you trade with paper money to get used to the system. The system is an amazing system. I use it each and every trading day, whether I'm trading options, futures, commodities, or currencies. It's all on one platform. Chad Coco, what's going on?
How's it going?
It's going great, man. You have a good Thanksgiving?
Yeah, it's pretty good.
Lots of good food?
Oh, yeah. We do steak instead of turkey. It's a little bit different.
That's different. And well, the cleanup on that is really easy, man.
Yeah, quite a bit. And it's don't have to worry about the turkey coming out dry.
It's in your belly. I like that. No doubt. No doubt about it. So, what's intriguing out here is, of course, you got a down day and no one's scared, man. I mean, the VIX have barely moved out here. Kind of interesting.
Yeah, a little bit of pop in the morning, but it kind of slowed down. It seems like it's just a normal correction coming off the highs we had all last week.
Yeah. Now, we had a couple of these high flyers. Apple intraday, folks. If you don't know this, what you had is that you had a couple large sells in Apple, and more than likely it looked like some stops got triggered at 117. and it dove to 111 like in a heartbeat.
Yeah, that's exactly what we saw here. So we were taking a look. We were wondering if there's maybe a bad print or something, but then we were just taking a look at all the orders that are coming through. It's just stops after stop getting hit.
Yeah, and what you had, folks, so check this out. What Chad is saying, the actual... and I was in front of the computer at the exact same time. So what you did have is this: is that when you see a downdraft that's dramatic, it's like, okay, was it a bad tick? And it wasn't a bad tick. The bottom line is that there were hundreds of thousands of shares that basically got hit. There was actually, I'm looking at it, the story. It was 30,000 different trades that got hit after that 117. So what I expect you will see now is that, and even in the option market, right, it's going to be like, okay, your premium's going to go up slightly. It's like, okay, is that a bigger seller, a larger seller, or just a lot of individual sellers, you know?
Exactly, yeah. So even the day after that happened, you saw the put-call ratio drop immensely on that. So the put-call ratio is sitting at 0.53 right now.
Okay.
So nearly twice as many calls were purchased as puts. So people are getting back in long positions, at least in the options market.
Wow. See, there's so much stuff you can glean from that option market, huh?
Sure is, yeah.
That's pretty cool, man.
Like the crystal ball.
Yeah, right. Oh, my God. As long as you know that the crystal ball can be broken, right?
Exactly, yeah. That's always the case.
Yeah, no doubt. Now, you know, and it wasn't just Apple. You know, I mean, some of these, you had Facebook was down a couple bucks. Twitter was off a couple bucks. Is the premium going up on those also?
So, yeah, actually, Facebook is sitting at 122,000 calls purchased today versus 51,000 puts, so a 0.42 ratio on Facebook. It's the same situation there. Even after the drops on these, people are still getting long.
Wow. Oh, man, this is a long-only market. This is pretty incredible, man. That's crazy. Okay. Hey, it is what it is, though, right? It is what it is. But that says quite a bit to me, because what we have had, what you can have very easily, folks, at highs, is that the dips have been rewarded on such a continual basis. I can picture why they don't think it's going to happen again, right?
Yeah, exactly. Yeah, just every time there's a little dip, it just seems to regain that, fill up that gap a little bit.
Amazing. And you know, as we're looking at the calendar, okay, so we definitely have the weekly options that, of course, each and every week. If we take a look at this, where's my calendar here? One second. So calendar-wise, is this? Let's see. So this is.
So we have weeklies this week, weeklies again next week, then the monthlies the following.
Then the month. So it's a short month. Yeah. So it's the 19th. Okay. So there's gonna be some action before the holiday. Yeah.
As well as some retail numbers coming out, and the speculation from the Black Friday, then Cyber Monday sales today. See how that turns out in the retail market. Lower crude prices gives more money in our pockets to spend, and hopefully in retail.
Yeah, there's no doubt, man. And if you haven't filled up lately, folks, okay, it is absolutely incredible. This morning, Chad, I was filling up, and it was the first time that premium almost hit under $3. It was $3.01. Isn't that cool?
That's fantastic.
It really is. I mean, and the wholesale, unleaded folks got down to 177 today. So you're going to see probably 210, if it's not a 210 right now for the regular wholesale unleaded, which is pretty amazing, man. That's huge money too, man. There's no doubt.
It adds up a lot, especially with some of these bigger cars.
Yeah, no doubt. So, weather-wise, we've had some wild weather coming across the country. What did you guys have over the weekend? What do you have in this week?
Yeah, so I haven't looked at the report for this week, but it was, I think, 12 degrees on Friday and then 50 on Sunday. So, swinging all over the place.
That's pretty cool, man. Okay. And we get natural gas. So, natural gas right now, folks, is out at $4. And, that pulled back today with some juice. It's going to be interesting, then.
Yeah.
Listen, folks, tomorrow, as every Tuesday, 12 to 1 Eastern Standard Time, he's got an outstanding option show sponsored by Thinkorswim TD Ameritrade. Does it right out of their headquarters in Chicago. You can get it right on your cell phone, tfnn.mobi. And, of course, if you want Tiger TV, just go to tfnn.com. That way you'll get his charts with the audio. Chad, you have a great night, safe night. And, of course, we look forward to the show tomorrow.
Thanks. Good to be here.
Okay, man. Have a great one. Have a safe one. That option show, folks, is just a phenomenal option show. What Chad does is goes through the strategies. And the strategies, folks, whether you're bullish or bearish, are awesome to understand inside the option market, because if you clear your head, you listen to the program, he goes through a few different option strategies each and every week. So check it out, particularly coming into the end of the year, particularly if you have portfolios out there that you want to protect those portfolios without some of the tax ramifications. That is really important to do, because what I do expect we are going to see, fast and furious in coming into the end of this month, is the buys and sells that take place before and at the end of the year. If we go over to this is really interesting. Like, New York doesn't have other things they can deal with, but I guess the mayor of New York next week's going to propose a bill that's going to stop horse-drawn carriages. 300 drivers and caretakers who steer them around Central Park, he's claiming are relics of the past. You know what the thing that's weird about this? I mean, I guess what they're saying is that when I just read this, it seems like it's animal rights activists that want to shut this down. But I don't quite understand that, because it doesn't seem like, I mean, horses want to, I never seen them abused there. But, if you haven't done that, folks, that's something that you want to get out and do. I mean, if you happen to be in New York. That's been going on since the 19th century. And I don't know why they're going after that particular point. But anyway, I thought that was a story that, like, to me, was coming out of nowhere. It's like, really? 877-927-6648. If we go take a look at the metals market, bottom line, inside the metals market, what you had, rejected lower price, never made it to the swing point, takes out the swing highs, does it with volume. That's in the physical metal, silver, gold, platinum. The XAU, the HUI, did the same. Goes topside with force. What I expect you're going to see out here is you're going to see the dollar come down. And the confirmation on the dollar, folks, the dollar right now is the most important thing to watch. And this is why. Because if we have conviction on the move lower, meaning that we have volume off the high, that would be saying that the dollar is going to have a larger correction than a normal correction. You got to remember that the dollar, had an extraordinary run topside. The dollar's been going up for 5 months straight. We just went from 79 to 88. That's a monster run. A normal correction in the dollar, and it's just a normal correction that wants to go higher, a normal correction in the dollar can bring it back to 82 or at 88. If you come off the high with volume, that'll be saying that you can get down to the swing point again. So we'll see where that shakes out. Why is that important? It's important for two different aspects. It's important if you're in the metals market, of course, or in the commodity market. My take is that it's also important if you're in the broad market. Why? Because the market itself, as the dollar's gone higher, market's gone higher. As the dollar pulls back, market pulls back. We'll see if that correlation sticks, but that is how the market's been for trading for quite a while right now. Dow Industrials finished down 51, NASDAQ off 64, S&P's off 16. Stay right there, folks. We're going to come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep. He'll give you the entry price, price target, and stop price of a week free trial to Market Insights started today. Visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow finished down 51, NASDAQ off 64, S&P's off 16. And don't forget, folks, at TFNN, live broadcasting every trading day, 8 o'clock in the morning to 6 in the afternoon. Our man, Mr. John Logan, kicks us off every morning, 8 to 9. And as you come over to our website, folks, you're going to see right in the very front, John's going to be doing a free webinar. And what that webinar is going to be about is on how to use the TAS Market Profile Scanner. This is for his subscribers only. Bottom line, though, you can test drive the scanner. It's a $97 value, absolutely free. This is going to be on December 9th. It's going to be a week from tomorrow from 6:30 p.m. to 7:30. It's an amazing software tool, folks. If you happen to listen to his program in the morning, you'll see that he uses the scanner. What he's out on the front page of TFNN, you can test drive it right now, free. It's a $97 value. You have it for the month, and you also get into the workshop, which is going to be on December 9th. Let's go to Matt in Boston. Hey, Matt, what's going on? Matt, you there? Matt's not here. Okay, so Matt wanted to look at natural gas and oil. So let's go to the natural gas market first. Natural gas was down 2% today. We're trading out at $4. And natural gas right now, we take a look at this. We'll put this. So natural gas comes off the bottom of 370. We gap lower today with volume. So bottom line, inside that natural gas market, you'd want it today first, which is 390. That's set up right now. I suspect what you're going to have here is a consolidation, meaning that, yeah, if you're looking at natural gas, you're going to want to wrap your head around it because natural gas, after a test of the low, wants to go up to this 460 area once again. Oil. So we wanted to look at oil also. So let's pull this oil market up because the oil market, no doubt, folks, crashed big time, okay? Oil went down 10% in one day. Now it's up 4.8% in one day. That's after being down, by the way. Oil went to a low today of $63.72, ended up closing up $3.22, so it's at $69. And what we have is this. Oil had done the ABC structure on the way down, extended itself. The ABC structure was $70, ended up going to $63.72. Now, that's the smaller ABC structure. That was the more conservative one. The larger one is $55. What we will have now is this. Well, first off, we're at $69.36. More than likely, you're going to see oil bounce to like $73.22. And what that would be, if, in fact, we get to that level, number one, and as you're moving up to that level, you have light volume, all that's doing is another ABC structure on the way down. The larger structure looks like it's a $55 ABC structure on the way down. We basically ripped this thing apart. The swing point had 152,000, actually had 190,000 contracts, and we took that apart with 553,000 contracts. If we go look at now that's on the daily basis. That's what happened on Friday. If we look at the continuous contract, and what the continuous contract will give us is just a clearer picture of a longer-term basis of what we're doing. The continuous contract has come down 6 months straight. We come down from 107 to 63 bucks. We're at 69 right now, and that's saying... This is interesting. So in the continuous contract, you can bounce a lot further than that. On the continuous contract, we can bounce like 77 bucks. Pretty easy, too, because we've been down so severely. We'll see where that shakes out. What we will have is this, though. So check this out. You're going to have a lower low that broke all the swing points. So your larger picture. So that's the short-term picture. You're going to bounce. I suspect we'll know tomorrow it's on lighter volume. That's the short-term picture. The larger picture is a big problem. The larger picture puts this at 75. Man, oh, man. Even conservatively, 77. Conservatively, this is going to put this 55, 50 bucks. And you know what? Check this out. We're going 54 bucks. Okay. $54 is the high of the low of oil of 08. That's when oil went to 32. That's where we're going. This is going to be... So, probability-wise, technically, we'll see how this bounce comes out. But it looks... What I'm giving you is this. The high of the low in oil was $54. So the price point, the price projections that I've just done go like this. Because we broke with conviction the whole setup going all the way back to September of 2010, what you can do is that, in the most conservative way to do this, you take the swing point you broke, which is $77. Then you go to the top of that consolidation, which is 112. You say, okay, you got 25, 35, you get 35 bucks. You actually take the $35 off 72, and that gives you the price point. And I know that, yeah, that's more than 55, but I'm going with the 55. The reason being is that your probability is higher that it would stop at the top of it. But you can, realistically, that's what, 72, man, again, right? It'd be really weird if it goes down to 30, 34, 35, but we'll get a much better feel for it, how this bounce comes in the next few days. And what we do have no doubt is this. The XLE, the Exxon Mobils of the world, they bounced today with decent volume. That's on the daily. What you're going to have on the weekly, however, is that now you're going to have a high volume week that is testing the high volume week of October. You know, in October, folks, ExxonMobil came down to $86. That was off a high of 104. High volume, low. That's going to get tested. Why? Because thus far we've already done 27 million shares, and for the week we're dealing with 105 million. So it looks like that's going to probably come in around the same amount of volume. What that'll do, that puts a spike into it lower. That's building cause to break down to lower price. We go to CVX. CVX, of course, was Chevron. Chevron and ExxonMobil are the highest weighting structures inside the XLE. Chevron did 13 million shares today, and we did 15 million at that low. The low that we're talking about, the high of the low is 109.50. We got to 108.68. Rejected it, had slightly lighter volume. That's on the daily. On the weekly, what it looks like is that we'll also, the weekly, we've done 13 million thus far. Going to be close. No, 13 million. If we have the same type of volume that comes in, that's also going to be a high volume test. That means we'll be back down to those lower levels. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow. Go get them, folks.